From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. Well, while I was chatting, having some fabulous conversations over the last hour, which I hope that you will catch up with on demand if you weren't with us, we've been seeing some really good momentum coming through in the market. In fact, the ASX on track for its best day in 3 weeks. Have a look at that. It really did a lot of that buying coming through in the last hour, up 1.3% there on the CBO 200. So we did track, of course, the rally coming through on Wall Street. We had a lot of momentum coming through in tech and energy players. Worth noting that Wisetech is cracking a fresh record high. That software company, if you bought in January, we're now in September, you would have made 74%. All right, let's get to our themes of the day then, because potentially a little bit of a relief rally coming through as we did start to see quite a lot of momentum in the last hour or so of trade. As I mentioned, we've got a gain of around 1.3%. We did have some good gains coming through from Wall Street overnight as well. That inflation print was key, but really crushing those hopes of a 50 basis point cut. But on the flip side, potentially that's a good thing, because a 50 basis point cut would mean that the US really needed some sort of emergency assistance there. Also looking at this oil optimism. Now remember, we were talking about the big slides that we had seen coming through in Brent in particular, but now you've got this hurricane as well in the US Gulf Coast. So there has been seeing quite a lot of momentum in the WTI price as well, and this Hurricane Francine prompting a lot of oil companies to shut in roughly 25% of the Gulf of Mexico output. Of course, that is a positive for our energy players today. And then news at 9, CEO Mike Sneesby leaving. Look, there was a really interesting report from the Australian saying that there wasn't really much choice but to resign for Mike Sneesby, given the company is going through this, I guess, crisis of culture, and there has been the stumbling share price as well. We should point out the stumble in the share price today of 9, though, is mainly due to the fact it's trading ex-dividend. Let's have a look at tech stocks, because I mentioned Wisetech actually hitting a fresh record today, and the fact that it has actually risen by something impressive like 75% over the year, or year to date, I should say. So $131.82 there. Next DC also looking good today, up 1.5%. And Zip was a front runner too, up by 8.4%. Uranium, we've got Fraser McLeod joining us shortly. He loves uranium. Boss Energy up by 10.5%. Paladin Energy also looking really good. This is a really interesting story, because Russian President Vladimir Putin has threatened to limit exports of the white metal in retaliation for Western sanctions. So we've had some big moves coming through. Also worth noting, we've had some big moves coming through in lithium as well. This as China's lithium carbonate futures hit the highest level in more than a month. Mineral Resources having another great day, up by more than 8%. Pilbara Minerals up by about 7%. And we'll just check in on those energy stocks too after the momentum coming through in oil due to concerns about Hurricane Francine. Beach Energy, now Hamish Tadgell from SG Hiscock was telling me earlier that they really like that stock. Santos, Beach Energy and Strike Energy having a good day, as well as Woodside today. Some of the other stories we followed, of course, Nine Entertainment, they did trade ex-dividend. We mentioned that CEO Mike Sneesby announcing his exit at the end of the month. The health insurer NIB higher today. Now we are seeing an exit there too. CEO Mark Fitzgibbon, he, I believe, is just retiring, I should say, 2 decades leading that company. Brick manufacturer Brickworks was a laggard. It flagged a $124 million hit in its financial report. And Australian Clinical Labs, $3.40 there. The fund manager Crescent Capital, though, did sell a 30% stake in a block trade. Well, let's get to Mr. Uranium himself, if I can call him that, and welcome to the COB, Fraser McLeod from Shaw & Partners. You've been singing this tune for a very long time, but it does look like what's happening in the Kremlin could be affecting some of these prices too.
Yes, thank you. It's been a tough 4 months if you have been a uranium investor, and we're through the worst of it now. We've had a decent bounce over the past couple of days, and there's lots of reasons to be looking at. I think really framed around the market as a whole, we have still, as you were saying, you have the Fed, which is going to adjust policy, whether it's 50 basis points or they start off on 25 is yet to be decided, or yet to be seen. But inflation is at this sustainable path to 2%, and the desire from the Fed is to avoid any hiccups in the job market. So we've got that support underlying in markets, and so we can now look at sectors and think, well, where is the real value over the past few months? On uranium, which is a good key play for us, there's a lot of geopolitical tensions that are affecting supply. It's almost a race as to who can cut off the supply from Russia to the US the quickest. The US were trying to do it. They issued a few waivers, and now Putin's threatening that he's going to cut off supply. That makes supply even less certain. We know also that demand is becoming more certain. So China is building nearly 50 new nuclear power stations at the moment. There's around 350 that's planned into the future over the next few years and couple of decades. That's massive demand, and we have, if we all accept that we need a carbon-free future, then nuclear power is going to be key. And there's only really a few stocks that you can invest in order to really gain the benefit from that, because post Fukushima, no one invested in the sector at all. So there's very few new mines that are able to come on, and not a lot of new supply that the world can truly see.
Yeah, all right. Well, of course, that has been a sector, as you mentioned, that you've been looking at for some time. What about when we look at iron ore? I mean, earlier this week, dipping below $90 a tonne, the first time, I think, since 2022. But there is this potential, I guess, view that some of these miners have been hit quite hard, and maybe there's a buying opportunity now.
Look, I'd be pretty cautious on iron ore. The iron ore market is hard to predict. It stayed up at very high prices for many years, and everyone was scratching their head as to when it will end. I think now, realistically, we're entering into a new phase whereby there's a lot of supply that's coming online. Most houses around the world have iron ore price forecasts that are now less than $100 a ton, well into the future. So China is going through the biggest property downturn in history, and is that China property market? Was it a bubble? Yes, it probably was. Is it bursting? Yes, it probably is. Is it turning into a crash? That really we don't really quite know as of yet. But what we do know is that the Chinese are still making lots of steel. They're starting to export it around the world because they can't consume enough of it. We also know that China is using an awful lot more scrap, and they're recycling. So that's not good news for new iron ore supply. And we also know that the supply levels that are coming on, everyone's ramping up, or everyone wants to ramp up. So Vale is ramping up, Rio Tinto is ramping up, BHP is ramping up. In Guinea, the Simandou project is coming online. That's a brand new project, going to be huge supply over the next few years. And even MinRes, they are still trying to ramp up. So there's lots of volume coming on, and that's at a time whereby maybe the level of true demand around the world is starting to turn off. So it's just becoming a much more difficult trade.
All right, and I guess as well, what we're looking at, Fraser, in terms of some of the potential positive trades. Now, I hadn't heard of this company until I had the pleasure of interviewing the CEO, who used to be my boss at ComSec back in the day, Paul Rayson. Hearts and Minds, it's a really good sort of feel-good story. Tell us what you like about this stock.
Look, Hearts and Minds is certainly the correct name for this. This is a listed investment company, and we should take note as investors that we want to use our money for good, and when we can find some true value in order to do that hand in hand, then all the better. But Hearts and Minds, in terms of their investment portfolio, they run a listed investment company. The underlying is a concentrated portfolio of maybe 25 to 30 stocks. Many of those are mostly really they're a global growth-led names, and they're made up of 16 invited fund managers who form the ability to be able to effectively give their key picks into the portfolio, and those picks have done very well over the years. But the listed investment company is trading at a discount now, rather than your investment fee as such going towards the fund managers. The fund managers are doing this effectively. They're handing over their intellectual property for free, and the fee that is collected, it goes to medical research charities. So Hearts and Minds over the past few years since they were set up has given $70 million to medical research, which is an amazing figure, really for the benefit of all humanity. And but currently you can get the stock at a 12% discount to its net tangible asset backing, which is pretty hard to do if you search around the world for a truly global portfolio. They hold things like Amazon, Microsoft, MasterCard, TSMC, so high quality growth names that are not available in the local market here. But yes, you can buy Hearts and Minds on our market at the discount at the moment. The listed investment companies, once their performance does well over a few years, they tend to close that listed discount gap, and so an interesting one indeed for growth investors with a positive ethical twist.
Yeah, indeed. All right, always good to chat. It's been a while, Fraser. Thank you. Fraser McLeod
Thank you,
there
indeed.
from Shaw and Partners. All right, the stock of the day was Nine Entertainment. We had Mark Gardner from MPC Markets and Daniel Ortizi from Stock Doctor join Koshi on the call.
The multi-channel thing now, I believe at some stage they'll be able to obviously offer the customer a better spend, and they'll be able to compete a little bit better with online as well. So yeah, I think this is just a stock that's been under pressure, and more bad news has probably hit it hard. Again, I mean,
you just avoid.
It's not that I like the company,
right?
But I mean, like I said, I liked the company a year ago, and I was just very disciplined in trying to not catch the fall.
So if you're in it,
I think if you're in it and you've worn this pain, you're probably staying in it overall.
Right. And I speak about this every time these stocks come up. It's just being very wary of the fixed costs in these business and the operating leverage. Like we've seen in the down years, 3% decline in revenue this period, 30% decline in profit. So, I mean, we get really excited because a lot of investors, and I think it's, one of the downside of investing, perhaps the simplicity of it, you're just looking at headline figures, maybe trailing yields, trailing PEs, and, they don't represent, fundamental values of companies and the outlooks to a very good degree.
Well, let's have a look at the market leaders on an update. We talked about the big move coming through in uranium stocks. I would imagine quite a few of those are there. Deep Yellow is up by 14%. Boss Energy also looking good, along with Tabcorp, Paladin Energy, and Zip, because we did actually see some really good buying coming through in the tech players today. Worth noting, Wisetech has hit a record. Let's have a look at the laggards today. Nine Entertainment, we mentioned, there was the stock of the day. Also ex-div, got to remember that. Brickworks took a bit of a impairment charge today. Johns Lyng was the subject of a broker downgrade as well. To the smaller end of town, and having a look at some of the movers there, Globe International had a great day, up by more than 33%. And to the downside in the small end of town today, Orion Minerals down 12%, along with some of the other resource names. All right, tonight it is about the ECB, of course, the policy decision, 1/4 basis point cut expected, the PPI as well in the US, and the monthly budget statement coming through in the US as well. Tomorrow, pretty light on in terms of Australia. We never really seem to get any data on a Friday, but a few more companies trading ex-div, including Lovisa, the jewellery retailer, and Ramelius Resources in the gold space as well. Car Group too, we spoke to them during reporting season. Actually, did you know that we spoke to more than 70 CEOs during reporting season? I was having a chat with my boss earlier about this, and I thought she was joking when she said that number, but no, it was 71 CEOs. If you haven't caught up on our reporting season coverage and wonder why I've got so many bags under my eyes, you can find it all on our website, ausbiz.com.au, excuse me, and we do have a tab for reporting season and the CEO spotlight as well. But just recapping where the market is today, up by 1.3%. Certainly a big rally coming through into the market on the close. And that was also as we start to see some uptick in US futures markets. The Dow futures are up by more than 60 points at the moment. So a very good day. In fact, on the ASX 200, the best day in 3 weeks. That is where we leave you this Thursday. We'll be back from 9:45 a.m. Eastern tomorrow. We'll see you then.